If you are new to credit, or maybe you have never been taught the correct way to build your credit, in today's video, I am going to teach you how to build your credit the right way once and for all here in 2024. So y'all make sure that y'all come back. Welcome or welcome back to Starr Knows Credit. My name is Starr Carter, and on this channel I talk personal financial education. So if that sounds like something that you're interested in, please consider being a subscriber to the channel. Make sure you guys cut on your notification bell, that way you're not missing out on any new content. And give this video a thumbs up. I really do appreciate it. This helps the algorithm and it will help push this video out to more people that may want to see this content. I always appreciate all your love. So let's go ahead and let's get into today's video. How to build your credit in 2024. Whether you are new and you've never had credit before in your life, so you might be very young, or if you had credit and now you've had some things to happen, or you didn't quite understand how credit worked when you first got it, this is your video today. So we're not going to skip the line on this one, guys. In order to build your credit, you first need to know what credit is. A lot of us have ruined our credit because we didn't quite understand what credit is. All we knew was that we could get stuff and not pay for it immediately. That's all we knew, all right? We know that credit allows us to get things and borrow things over time, whether that's a car or whatever it is, and we just know that as long as we make the payments, we will be able to get that credit. But credit is so much more complicated than that, and that's why a lot of people end up having issues with their credit, especially if they never learned about credit before they actually went out applying and doing whatever it was that they were doing with their credit. They didn't know how important it is. So I did a complete breakdown of credit last month on my channel, so I'm gonna link that video up here or wherever the card is, so that you can go back and look at that video first before you even think about starting to build your credit. You need to already have that information. You already need to have that education on what credit is. I'm gonna give you just a brief breakdown real quick. So credit in a nutshell, when we're talking about the credit score, and I'm talking about your credit score, the most important thing that lenders are gonna look at first before they even look at your actual credit profile. So your credit score is a score that's going to tell a lender how risky are you if I allow you to borrow this money from me. Okay, so if I'm the lender and I'm looking at your credit score, I'm looking at how risky you are based on the credit score that is given back to me. And you want that score to be as high as possible. So when I talk about in that other video, when I break that down, we know that payment history, when it comes to the FICO score, payment history counts as 35%. Well, what does that look like? That looks like 192.5 points. So that's why that other video is so important, because I break it all the way down with the points and telling you, what does 35% look like on the payment history? What does 30% look like on the credit utilization? All those different things are a part of your credit score. That's why that video is so important, because when you know the breakdown and what your part is in growing your credit score, it will make this video right here so much more easier for you to comprehend. So let me know if that part right there makes sense in the comments. Now, we know that credit can be used to purchase items over time. That's what credit is. Essentially, you're just borrowing money over time, and you're going to pay this money back to whoever lent it to, sometimes without interest, a lot of times with interest, okay? But there's other reasons why you want to have a high credit score, right? Not just because if you want to borrow money, but because a lot of times it can make and break just simple life things. So let me give you an example of that. You can have your credit pulled when you are applying for a job, especially a job that's in the finance sector, whether that's working for a bank or doing anything with investments or whatever. They may actually check your credit report to see where you are with your credit, because here's the thing, a lot of times our character comes into our credit. When you're talking about if you're honest, do you pay your bills on time, they are looking at that and they're correlating honesty to good credit and dishonesty to bad credit. Okay, so that's why it's very important. So not only will they pull your credit sometimes for employment, but they will pull your credit a lot of times as a soft pull to grant you utilities if you're trying to get your first apartment. So they're going to pull your credit for the apartment that you may be getting, your first apartment, and they may also pull your credit for your utilities to determine if you need to put a deposit down for those utilities. So the better your credit is, you may or may not have to put a deposit down for those utilities. If you have good credit, you may or may not have to put a security deposit on that apartment. So it just depends on what you're doing. Your credit can always come involved, even if you're not actually trying to apply for a credit product that you're actually borrowing money. Another thing that can come into play when it comes to credit is insurance, right? Insurance plays a part with your credit as well, because here's the thing, you guys probably never knew this or may have, but insurance, like your car insurance, your home insurance, they look at how good your credit is, because your credit, like I said, your credit score is a risk factor score. They're trying to see how risky you are. So when it comes to insurance, if you have a higher credit score, the likelihood that you would cause claims to go up, or a lot of claims to go up, is very low. So therefore, the higher your credit score, you get lower premiums, you get lower rates, you actually even get approved to be in that insurance company. So say for instance, if you were trying to get car insurance and homeowners insurance or whatever, or any type of insurance with State Farm, they may do a soft pull just to see if you can even get approved outside of your driver's record. Okay, and then that's going to also determine what your rate is. Are we going to give you a higher premium, or we're going to give you a lower premium? We're going to give the lower premium to the ones that look less risky, right? We're going to give the lower premiums to those people. And if you got a bad credit score, we're going to give the higher premiums, even if we even accept them as an insurance customer, because we do not want to take any chances on them running up claims, you know. So a lot of things go into your credit score, not just lending. So I don't want to skip the line on this. If you guys have never ever gotten any financial education on how credit works, then you need to check out that breakdown video that I did. I also did a video last year for my Credit Ready program students that was about 2 hours long, and I really break that one down. So it's about 2 hour long lesson that I actually shared on the YouTube channel, and I will link that one as well above. So you got two videos, two comprehensive videos that can really break down what credit is. So do not skip those, okay? Now, when you're trying to get approved for lending, when you're trying to buy something, I want you to also know that they do not just look at your credit score itself to say yes or no, but they will also look at your complete credit profile and the things that's in it. And not only will they look at your complete profile to see what you've been doing inside of that profile, outside of looking at that score, they're going to look at your income, they're going to look at your assets, you know, the things that you own, and they're going to look at your liabilities, the other debts that you may already owe, to give you a decision whether they're going to approve or deny your credit. So it's not all based on your credit, but your credit has a very high bearing on getting approval, of course, but those other factors also come into play. They're not going to lend to you even if you have an 800 credit score if your debt is higher than your income. So you can have perfect credit, but your other things may not be in a line. So we're talking about a holistic approach to finances on this channel, because I want all the I's dotted and all the T's crossed. Okay, so make sure, like I said, that you're not skipping the steps and just getting to, okay, let's get to the lending, let's get up and learning about how to build a credit without getting the foundation. We got to lay a good foundation so that when we do start building our credit, we will have good credit for life. That's what it's about. Another video that I done just recently is about credit goals. After you learn about credit, then we need to have some credit goals. So what is it that you want to do with credit, for the reason why you're even building credit to start? Okay, do you want to get your first car? Or maybe you've already had credit and now you want to do the right things with your credit. So you want to buy a home, you want to refinance a car, you want to get your first brand new car, whatever it is. There's endless types of things that you could want with your credit, but you gotta have a goal, and you gotta have that goal in mind when it's time for you to start building your credit. So I want you guys to just think about that. I'm gonna link that video too. Start thinking about the goals when we're talking about building our credit. What is it that we want to do with our credit so that we're building it in that direction? So the first thing that I would recommend, once you look at that other video and get that other foundational education, and now you are actually ready to take the steps, I want you first to get a real bank account. So if you're somebody young that's never had a bank account, or you may be older, whatever you are in your credit journey, I want you to have a real bank account somewhere, preferably that you can actually walk into the place and talk to tellers, talk to personal bankers, talk to loan officers. All those different vehicles are right there inside of a financial institution. I am all about personal banking relationships, establishing those personal banking relationships. When you do that, you are setting yourself up to have a lender on deck and always ready when you need your credit, okay? So that's why I love relationship banking, okay? So if you don't already have a bank account, that's going to be your first thing, is to do some research and get you a bank account. Like I said, preferably a bank that you can actually walk inside of. Now, I love credit unions, so if you could get a credit union bank account, that would be even better. So I did a video just recently on how to pick the right bank or credit union. I'm gonna link that video, and I just did a video about credit unions and why I love them, so I'm gonna link that video as well. But those are some of the things that you can also look at if you don't already have a bank account, because I know a lot of the young people, y'all got Chime, y'all use Cash App, y'all use Venmo, y'all use some of these other digital wallets, and you use these online banking systems for to have your money going. But I want you to get into the habit of building a relationship, going into a bank and actually talking to tellers, talking to loan officers, talking to personal bankers, and actually establishing a relationship. So establishing a relationship will look like opening up a checking account with this institution and a savings account at the bare minimum. Now, you may have other needs, but at the bare minimum, let's start with the savings and a checking account, because that's the first relationship. You want to show them that you can save money and that you are responsible, okay? So having a checking account and getting your direct deposit going into that account shows that you have income, okay? So this is all foundational things that we're talking about. We're laying a foundation. If you have so much money coming in from your direct deposit going into your savings, that shows a lender that you don't spend all of your money. You do have the ability to save money, and when you get ready to borrow money, it looks better because you're not constantly borrowing, because it looks like you're then living off your credit, and you never want to look like you're living off your credit, okay? In other words, you never want to look broke. Okay, you may not be broke, but if you look like you're struggling, that's how you can also get denied, even with a good credit score. So we got to build the foundation first, right? So we want to make sure that we have money saved, and we also want to show where we're using the checking account by paying our bills with it, showing that we're responsible. So if your insurance draft, your utilities draft, any of those things, you know, coming out of your checking account, whatever it is that you pay, you want to use that debit card and use the services that that financial institution has. That for you, like I said, you are building that relationship by using their services, using their online banking, getting e-statements, because that saves them money. So especially with the smaller local community banks like credit unions and your smaller local community banking system, you want to utilize as much of the things that they have. That's how you build in a relationship. Now, while you're in there, and if you're actually able to sit down and open up an account with someone, and you got a personal banker here, or sometimes lead tellers open up accounts for new customers or new members, if it's a credit union, then you want to let them know what your intentions are for this account, and therefore they can tell you what they offer and what they have in alignment with your credit goals. So you can just let them know, hey, this is my first account, and I want to get my first car, or I'm trying to get my first apartment, and they may have things that they can tailor to what you're trying to do. So that's why goals are so important, because then you already know what you're doing. Now, another thing is what I was talking about, your credit goals, and picking the right financial institution. In that video, I'll tell you, you need to do your research before you even go opening any account. So when I'm telling you, you're sitting down and you're talking to a personal banker and let that person tell you what they offer, you should already know what they offer, because you should have done your research before you even go and open up an account. That's why on this channel, I really don't like recommending any account, because there's different things, different institutions offer different things. So you always got to find one that's going to fit your financial needs and your goals. So make sure that you're not just opening one because somebody here on YouTube told you that it was a good account to have. You need to make sure that it's good for your financial needs, because personal banking is personal, okay? Once you have established this financial institution and you've done everything, you're starting to build that relationship, the second thing that you can do is open up a secured credit card. That is one of the best vehicles to get started. I love starting off with a credit card with the financial institution. So you want to make sure that the financial institution that you pick offers secured credit cards, because everybody don't offer secured credit cards. So make sure that if that's a route that you want to take to build your credit, you want to start with the financial institution that has secured credit cards. And secured credit card is just a credit card that you will fund with your own money. If you're going to get a secured credit card, I wouldn't do anything less than $500 to start off with. That's a really good starting point. Anything less than that is so easy for you to get close to your credit utilization that it can hurt you more than increase your credit score. So 500 is the minimum that I would put on a credit card. I like 1,000 minimum, but 500 would be the minimum. So if you do not have $500 saved already to start a secured credit card, then you need to be building that savings account that we talked about and getting up to $500 so that you can have the money to put on a secured card, because we're not going to borrow money to get money. We're not going to do that, okay? You need to already have the money. So you're not ready to build until you already have a foundation, okay? So let's do that first. Having a secured credit card, you can have that card forever and ever. So a lot of times what's going to happen, once you get a secured card and you use it the correct way, eventually that card will graduate to a unsecured card and they will give you your deposit back. And that's what you want. You want to use that card responsibly for about 6 to 8 months, and then sometimes it may even take a year for them to graduate the card to an unsecured card. But you want to do that because in the meantime of you establishing the relationship through the other channels that you may have with the financial institution, you have this credit card now and they are looking at your habits. So if you want to buy your first home or whatever it is that you're trying to do, or buy your first car, using this credit card shows them the type of person that you're going to be, especially if they are the first person that you've ever had credit with. So it's very, very important, because you can possibly do all your banking and all your lending with them, you know, starting out, especially your big ticket items. That's why I like credit unions, because you know they're going to have the lower rates for if you want to get a car, lower rates for a home, lower rates for those different type of big life event things, okay? So that's why I like credit cards, because you can have a secured credit card that graduates forever and ever. You can have a credit card for 30 and 40 years, depending on if that financial institution still offers that card for that length of time, and also you as the lender paying your card on time and not defaulting. Another way that you can build your credit within that same financial institution is getting a secured loan or a pledge loan. Some people have heard of it as a pledge loan or a secured loan, or it could be a share secured loan if you're dealing with a credit union, okay? So you want to look at getting that. It's the same thing as a secured credit card, but with a secured loan, you're also putting up your own money, and I would not get this loan if it cannot run out at least for 2 years, because FICO needs at least 6 months of on-time payments just for them to start calculating your score, right? So if you have it for at least 24 months, 18 to 24 months. I like 24 months better because it's giving you 2 years of credit history, and 2 years is a very good, strong foundation. So if you want to go ahead and just do the 24 months, you just want to make sure that it is an amount that can stretch out for 24 months. Now, that means that the loan may be $2,000 or $1,000, just depending on the financial institution. Your payment might not be but $20 a month, but you want to stretch it for at least 2 years. And this right here will give you an installment loan building, because when you're building credit, there's different types of loan. That's the credit mix, right? So if you have a secured credit card and a secured loan, that is a credit mix, because you got a revolving line of credit and you have an installment account, okay? So you just want to make sure that you have a credit mix, but take them in order. Don't try to do it all at one time. Get the secured card first, because you can have that card forever and ever, and then get the secured loan 6 to 8 months after you've had the secured card. That way you have any overlap and you're showing where you can handle different forms of credit. But like I said, you do not want to skip the line. You want to make sure that you're doing this in order, the correct way. Therefore, you're laying down a solid foundation when it comes to your credit. Now, another way that you can build your credit up is by being an authorized user on somebody's card that is responsible with their card. This is what I did for my son. When he was getting ready to get his first apartment, when he graduated with his bachelor's degree and he could no longer live on campus at the college, he was going to have to get his first apartment. I went ahead and added him as an authorized user on a card that I've had for well over 10 years. And therefore, when he went to go apply for the apartment, he was approved. He didn't have to pay anything extra on the deposit, and also for his utilities, same thing, no extra on utilities, because it actually boosted him over 700. Now, my son did have his credit activated because he had a $2,500 student loan that he had took the first semester when he first went into his getting his bachelor's degree. So that was the only other thing that was reporting on his credit, was that $2,500 student loan, him being an authorized user on my credit card. But that was enough for him to get his apartment and get his utilities without a deposit. Now, there are some pitfalls to being an authorized user, so you can't just pick anybody with a credit card that you're cool with or that you're related to or somebody and say, hey, can you put me as an authorized user on your credit card? You got to make sure that that person's credit card is in good standing, meaning that they can never have been late. All right, you don't want their history to transfer over to you and they've had late payments. Okay, you do not want that, because whatever they have, you're going to inherit it. So you want to make sure that the credit card is in excellent standing. That means no late payments and not maxed out. Okay, we don't want any maxed out authorized user credit cards, because that's going to defeat the purpose. Like I said, whatever they got going on, is you're going to inherit it. So you do not want somebody who has a card that's maxed out. You really don't want somebody a card that carries a balance all the time either. You want to get cards that, you know, they are responsible. They're paying their cards back off every month, and they've had that card for at least 2 years or more. Okay, you want somebody with a very strong history, because you're gonna gain from that history. Okay, you're going to gain from that history. So when I put my son on one of my cards, I've had that card over 10 years, right? So he gained from my good credit history. But if I've had a late payment, if that card was maxed out, it would have hurt him instead of helping him. Okay, so you want to make sure. Another thing, you do not want to be buying trade lines online. I don't care who's selling them, TikTok or whoever, because you do not know who these people are. Okay, and therefore you don't know what they're doing with that card or who else they've added on to that card. So if the authorized user account is not something that you're able to do, I do not advise you doing any backdoor method to this, okay? Because a lot of times we want to skip the line, like I said, and not build the right way, and then at the end you wind up getting more issues, more headaches, more trouble than what it's worth, because you did not want to take the time to do it the correct way. And I'm trying to prevent that on my channel. I want us all to have the right foundational building of our credit, and therefore we will sustain our credit for life, okay? And we'll never have an issue with credit. And that's what credit ready is. Being ready whenever the time comes up, we do not have to worry about it, okay? We never have to worry about it. Now, those were my top recommended ways to build your credit. Now, I already know that there are so many different things that are advertising, so many people on YouTube that telling you how many different ways that you can build your credit, and they probably was none of the ones that I talked about, or if they were on the bottom of the list, because you got all these different ways to build your credit now. You can have your rent reporting on your credit, like Experian Boost does that, and some of these other rent reporters, you know, all these different ways that you can do that. Those are ways, you know, that you can establish credit. You can also do like the self-builder, you know, loans, and Chime's got a way now. So there's a whole lot of different ways, but I don't endorse none of those ways. I don't, because I like the traditional foundation of building a relationship with a financial institution. You can always branch off to other things once you build that foundation. So you may want a Capital One card. That's cool, but I did a video telling you that Capital One is not a credit building type of credit card. You don't want to get a credit card with Capital One as a secured card or as a Quicksilver with a $300 limit, because guess what? They'll put you in a bad credit bucket for the rest of your life, and you'll never get their best cards. I mean, you can get approved for them, but you won't get the bonuses. You won't get any of the rewards. You won't get the benefits of those different cards. So there's other ways. There are other ways, but it's going to cost you time and it's going to cost you money when you do those other ways. If you're building with Chime, if you're building with Self Builder, are those institutions going to help finance you a car? Are those institutions going to help you finance your first home? That's what you got to look at, because you're wasting time with them when you could be doing that with a financial institution that can actually lend to you when you're ready. Okay, when you're ready to get the first car, when you're ready to get your first home, or when you're ready to refinance a car, whatever it is, whatever life is life and it needs your credit, you got to be doing your relationship and forging that time with them that's going to be able to help you, versus these other ways, because reporting your rent is not going to help you get a car loan. Okay, it's not factored in to the FICO score. Really, what your rent is going to look like is going to look like an installment loan. You don't want them to think that you got this high installment loan when it's your rent. Okay, so you got to think about the things that are out there that could actually get your score going, but how is it going to look for you long term? How is that going to look? So don't try to skip the line. Do not try to skip the line when it comes to building the right foundation to building your credit. All right. If you have any questions, please leave me a comment down in the comment section. I'll love to help you whatever I can. You can always email me too at starrknowscredit@gmail.com. Don't forget, you can also join the Credit Ready program. I'm going to leave a link to that also in the description and the pinned comment. So there are so many ways, guys, that you can build your credit the right way. If you need help, that's what the Credit Ready program is. It's a whole community. You have access to me and a whole community of other people that are also trying to learn. So there's so many ways that you can do this the right way, so that you're not having to backtrack and do it the right way later on in life. I was one of those people that had to do it backwards. Okay, I didn't learn it when I was young, so I had to learn it as an older person. But if you're a young person looking at this video right now, I'm trying to save you some time. And if you're an older person that's looking at this video, I'm glad that you're getting the education. I'd rather you get it late than to not get it at all. That's what matters. Okay, so again, thank you so much for looking at this video. I will see you guys in the next one. Check out these next two before you leave.